Hi, everyone. Thank you for joining us today to talk about Principles of Finance. It's an exciting new textbook from authors Zvi Bodie, Robert Merton, and Richard Thakor. I'm Victoria Winke, the marketing lead for this title. Before I introduce the authors and hand it over to them to sort of start us off, I just want to note that if you have any questions or comments, to please use the chat or the Q&A function throughout the webinar. We'll have plenty of time at the end to answer all questions. And I will also put my email in the chat in case you have anything following the webinar that you wanted to reach out and ask. You can email me to do so. So without further ado, I introduce authors Zvi Bodie, Robert Merton, and Richard Thakor. Thank you all for being here today. Zvi Bodie is a professor emeritus at Boston University, where he was the Norman and Adele Barron Professor of Management. He has served on the finance faculty at the Harvard Business School and MIT Sloan School of Management. Among his many published books and textbooks is the best-selling investments textbook with Alex Kane and Alan Marcus. Robert Merton is the School of Management Distinguished Professor of Finance at the MIT Sloan School of Management and Joan and Natty MacArthur University Professor Emeritus at Harvard University. Merton received the Alfred Nobel Memorial Prize in Economic Sciences in 1997 for a new method to determine the value of derivatives. And lastly, Richard Thakor is Associate Professor of Finance at the University of Minnesota, Carlson School of Management. He has published numerous academic articles in top economics, management, and finance journals and has won multiple teaching awards, including being named by Poets and Quaints one of the top 50 undergraduate business professors of 2024. And with that, I will hand over to Richard, who's going to start us off.
All right. Well, thank you very much, Victoria, for the introduction, and thank all of you for joining us for this webinar. My name is Richard Thakor. What I'm going to do to start us off is just give a brief overview of the book and how we see it. Then I'll hand it over to my co-authors, and each of us are going to highlight what we consider one key component of the book to be, and then we'll open it up to a broad Q&A. Okay, so our motivation for starting working on this book is that we view finance as having a lot to offer. It's not only applied science that's used around the world, but it's also practically a necessity in almost any area of life, whether it's our personal lives, business within companies, public affairs with the government. Finance really permeates absolutely everything. And in the last number of decades, the field of finance has seen many fundamental advances, both in theory and in practice in the real world, as well as the interplay between the two. However, what we've observed in our own teaching is that finance is often difficult for students to learn. There's a large breadth of content, many institutional details that are always changing over time, that just many times make it challenging for students to understand the field and really even enter into the path of trying to understand finance. So what we've aimed to do in this book is to try and integrate foundational principles and many of these fundamental advances in finance in a coherent and systematic manner that we feel helps students to learn better about finance. So, as I mentioned, what I'd like to do now is I'm going to turn it over to my co-authors, and each of us is going to highlight one main feature of the book. And then with each of these, we'll try and give a few examples as well, and then we'll open it up to Q&A. So with this, I'll turn this over to my co-author, Zvi Bodie, who will talk about some of the principles that the book is based on.
Thank you very much, Richard. And we've advanced to the next slide. I'm going to talk about what it means to adopt a principles-based approach, which all three of us believe in very strongly. And it's often very frustrating for students to deal with the myriad institutions that exist in the financial system, especially since they differ from country to country. As you can see in the diagram in this slide, this is just for the U.S. financial system, what the regulatory system looks like. And if we were doing this diagram 20 years ago, it would look quite different. And I suspect that in another 4 years, at least, it's going to change again. So institutions and memorizing a list of institutions and what they do at any particular time is not a particularly efficient way to understand the financial system. Rather, we think a much more practical way to understand the financial system throughout the world and over time is in terms of the functions that they perform and the principles that are involved, because those don't change so rapidly and so much across different countries. We can move forward to the next. Okay, so what we've done is come up with a set of 10 core principles, which are unifying themes throughout the book. And in fact, in just about every chapter, we demonstrate how that principle has relevance. We don't have all 10 in every chapter, but we have at least 1 or 2, and in some cases, 4 or 5 principles. They apply everywhere in the world. They are stable across time. And I think it's much easier to understand finance and the financial system by understanding each of these principles and how it applies. And institutional change, actually, in a principles-based approach, institutional change is interesting because we get to see how the principles are applied in a different institutional structure. And the way the book is written, built around these principles, gives us flexibility in structuring the courses. But I will not talk about that now. Richard will talk about the flexible nature of the structure of the text. Well, I'll hand it off to Bob Merton.
Oh, well, thank you, Zvi, and thanks for that introduction of the basic principles and concepts. I'll be very frank with you. What I'm very excited about with our book, and what certainly motivated me very much to take part in it, was the recognition that, well, finance goes back to the beginning of time, who knows? As a science, finance is fairly young. I would mark it as really starting in the early 1950s. But by the late 1960s, it had evolved very rapidly so that it was really a full science. And, when I say it's a science, I mean it really is a science. It has data, lots of it now. It has hypotheses and theories and so forth. And really, that's what's, most of textbooks, you look at it, the foundations of them, and you look at them, come from really the finance science principles. Now, what the book does is recognize that even though it was a science by the late 60s, it had very little impact on practice. But subsequently, starting in the 1970s, that's a half century ago, the finance science and finance practice in the mainstream, so across all the parts of finance, became integrated in that the finance science played a fundamental role in financial innovation and development. And that relationship has continued through to today. So that's very unusual. Now, if you have any doubts that it's a science, I mean, we could go through it. I'm not going to spend my 5 minutes or whatever, but on that. But options are, I mean, there were, I don't know, 8 or 10 Nobel Prizes awarded for discoveries in the areas of finance. In my case, in options, but in a number of different places. So it is a science. Now, what really, bringing these two together is what makes this exciting. And what's not in the textbooks, as far as I have seen, at least we always talk about first course, is a recognition of how many advances have occurred that really are now mainstream core concepts. They've established principles, and therefore they should be taught at the beginning when you're teaching for the first time people finance. These foundational elements need to be learned first as the most efficient way, as it is in all other sciences that I'm aware of. And so with that, what I want to point out is that from the general principle of working with concepts and principles that are universal across all parts of finance, the 3 chapters that we have in the concept part of the book, the core, the beginning, that we've introduced that I don't think is in any other book, first course book, is a chapter on options, and I'm going to elaborate a little bit on that, but also, of course, a chapter on personal finance. And that's, as far as I know, quite novel. And then last, and I'll come to that later because it's the last chapter in the book, is what Zvi alluded to, is looking at the financial system from a functional perspective. And I'll talk briefly about why that's innovative. So these 3 chapters really, to me, stand out. And because they're core, certainly the first 2, because they're in the concept section of the book, they no matter how you organize your class, whether it's going to be focused on corporate finance, whether it's going to be across capital markets or both, these principles need to be learned and need to be doing. And once they're learned, they can be used very efficiently throughout the book to teach a lot of things so that people learn it is a unified way of thinking, going from principles and say, oh, we're in a completely different part of finance, but see, the same principle applies here, but it's going to be done differently. All right, so let me say a few words about particular ones. In the case of options, the chapter on options in the first part of the book, options markets are global and very important and big, but that's not the reason I think it's there. It's just that options are really flexibility. In a world of certainty, flexibility has no value, but in a world of uncertainty, we need options or flexibility to address and manage the risks that we are facing of uncertainty. And so, and the bigger the uncertainty, the more valuable is this flexibility. That permeates every decision made under uncertainty. So this is foundational, okay? This is really the core of way of thinking about it. And, if you want a simple way to think about it, look, suppose you're deciding on a strategy, A or B, or you're trying to decide whether I should buy stocks or should I buy bonds, okay? Now, if you knew for certain which one was going to come out better than the other, you know your decision would be very simple, but you don't. No one does. However, if you buy the option, the flexibility, that after you see what happens, so the future becomes the present, after you see that, then you have the choice to pick which one you want. Do you want stock or do you want bond? After you see the ending, in effect, optionality, that kind of flexibility, takes away a core uncertainty. Which one is better? And I don't want to get into a big lecture here, but I want to underscore this is at the foundation of decision making. It's used everywhere. Okay. Now, second reason for using the option, having options is it's a valuation tool alternative to present value. Present value, of course, has been the workhorse always, and it still is. But options theory is not based on present value, has different concepts, different inputs, and so forth. And it's ideally adaptable to handle problems, whether corporate finance or personal finance or whichever, to handle problems that discounted cash flow, present value doesn't do very well. Okay, so it's very complementary to the two of them. So that's a core family. Then next, I would point out that just about all kinds of securities and instruments that trade out there all have essentially embedded options. So if you understand options, you can understand credit risk, for example. So we think that this was something that should be in the foundations. Now, we also have another chapter on options in the third part of the book on capital markets, where it looks more traditional in the sense it's more technical, it's focused on computations and so forth. But this first chapter really focuses on the characteristics of options as a mindset, as a way of thinking, and that we have very strong, useful tools, practical tools for implementing it. So, I hope this excites you as much as it does me. And when we all say these concepts permeate the book, we'll use options, of course, in the beginning, but then we'll apply it in the corporate finance section in very significant ways, both on the investment and on the financing side. We'll then apply it in capital markets. So we apply it throughout the book. So if you learn the foundation, you're in a very good position to move forward. As a teacher, I've loved having this situation because now when I talk about the things I wanted to do, I can use that without having to be highly technical necessary, but also it can be very technical depending on the students. So that's my message, that those two. Now, personal finance, let me just simply say, why do we build the financial system? It's to make people better off. Well, people are personal finance. And so this is very foundational as well. Not only that, personal finance used to be a sort of touchy-feely thing, so forth. It's highly technical today. It's highly done. The industry has grown. Its innovation is coming. You know all about all the technology. And so we're going to be able to serve people in very important ways. So everybody's interested in personal finance because they have to do it. As Richard said, everybody has to use finance. Everybody's interested in what they should do with their savings and so forth. But also the industry of wealth management or personal finance advising is enormous and it's growing. And so if you're going to look for a place to work in finance, it's a pretty darn good place. And by the way, if you're going to go into government, you need to be able to understand personal finance, particularly because it's about people, both to be able to understand what you would bills or something or regulations that are being set to say, does this make sense to me? What questions to ask? So we think this is a very universal subject to have. Plus, it's motivating. they're coming for their first course, they get into this, and right away they see something that not only relates to them directly, but it may relate to something for their parents or for friends. And so you see that I just see it as a really cool thing to have, and it's not there as far as I know. Now, the last thing I'll say is on the last chapter of the book, which I already mentioned, the financial system and functions. Zvi already said it, so I won't repeat it too much, but just to say, because it's based on principles, what the student learns and how to think about it and how to analyze it is not really highly related to the particular institutions used to perform those what we call functions or activities. Okay, so for example, in retirement, in some countries where it's agrarian, family serves the function of retirement. In other countries, they have a big pension or a social security. And as we all know, a lot of the retirement systems around the world, from Asia all the way through around the world, are moving more and more to a system in which people have individual retirement accounts, or they have, in other words, they're now having to take the risks in ways that they didn't with Social Security type system. Not that the others were going away, but the systems are changing. The institutions, from family to government to private sector, personal, all of those institutions are different and quite different when you look at them. And at any point in time, if you go from one country to another, it's certainly done in very different ways. But if you've understood it from a functional point of view, it's all uniform. It's the same thing. It's the same problem. And that's so powerful as you move forward into more and more detail about the subject and advanced topics. And of course, I know all of us here in the US, we have students from everywhere in the world. So if we just talk about the US system or an Anglo-Saxon system, as a set of institutions that are the core, they may not be very helpful to people from a different environment. Or if we look at how it's done now, and as Zvi mentioned, if in 5 years it's being done differently, instead of having banks or something else, you have something quite different, or insurance companies, okay, coming in, then the knowledge of teaching them the institution becomes pretty worthless. So if they've invested their times with us, teaching them, learning institutions only to have them become obsolete or not very valuable to them. We try to design this book in concept, and that's the way we've always taught, is the idea that we want to give our students long shelf life. And I tell them that. I said, that's at the core of how I at least would teach, is I want to give you things that will not only help you when you get your first job or in 5 years, but will serve you throughout your life, even if you move out of finance into general management or just something completely different. And so that's what I wanted to tell you about integrating these most advanced things that look very specialized, but when you look them in the right framework, they're foundational, they permeate every aspect of finance. Thank you.
Thank you, Bob. So what I'll do is just conclude by talking a little bit about the structure of our book, which we feel helps it be easy for instructors to adopt. So I'll go over a few key points here. The first is, as both Bob and Zvi mentioned, our book is principles based. So we have our set of 10 principles that really permeate through the entirety of the book and pull it all together. Another feature of the book that we have is that it has a modular structure. The book consists of 3 different parts, which can be adapted to many different courses of different lengths, as well as different emphases. The first part are core concepts and principles. The second is corporate finance. And then the third is asset pricing and financial markets. And so the idea behind the structure is that for an instructor, it should be easy to see how it can be adopted into existing courses, as well as new courses that an instructor may want to develop. So to give one example, for an introductory course, depending on the length of the course, it could cover all 3 parts or just cover the first part. If an instructor wanted an introductory course to be a little more focused on corporate finance, many of the chapters from part 1 and then select chapters from part 2 would be appropriate. Alternatively, a more financial market focused course would be part 1 and then chapters from part 3. The course is also appropriate for follow-on courses beyond the introductory course in finance. So for example, I teach here in Minnesota a course in corporate finance at the MBA and undergraduate levels. And what I teach essentially mirrors what we have in the book for part 2. Now, another feature of the book that I think will help with adoption is that we try and include clear step-by-step explanations of the different mathematical concepts. One challenge for students in learning finance is that there's often a lot of math to try and penetrate through. We include a lot of mathematical examples along with a lot of solutions to them, and we try and cover it at an accessible level with clear step-by-step explanations of each of the mathematical steps, not skipping any steps, as well as the underlying concepts. In addition to that, we have problems and examples in the book that incorporate the use of Excel. Whenever we use equations or key terms, we always try and go back to where that's introduced at the first point in time in the book. And we also have knowledge check questions along with solutions throughout the book to help students to understand each of the mathematical steps. The last thing I'll mention is that we also have an online suite of supplemental resources that I think will be helpful for both students as well as instructors. This includes Excel apps, which integrate with the material in the book. We have an online suite of more than 800 test bank questions, which instructors can use both to assign as homework as well as for quizzes. And then finally, we'll also have an online suite of videos. And these will consist of short videos, which have the three of us introducing each of the core concepts in the chapters, as well as short, more focused concept videos that will go through some of the different problems and examples in the book, and also explain some of the key concepts in the book. Now, with that, I'll turn it back over to Victoria, who will help to moderate if any of you have any questions.
Thank you, Richard, Zvi, and Bob for your presentation. We do have a question in the chat. If anybody else has questions, just remember to put them in the chat. You can also raise your hand if that is easier for you. So our first question is, might you briefly compare and contrast the content and level of analysis of this textbook with your previous financial economics textbook?
That won't be one for Zvi, I think, since he's the most textbook writer, along with being the co-author on both books.
Zvi, can you answer that? 1 second, you're muted.
Well, if you like, I can say so because I'm also in that bit, but I haven't written as many textbooks as Zvi. Look, at one level, the concepts are similar because all of us, all our professional lives, have taught from this perspective in our own courses, which is the idea that you have this common knowledge, which you then, the concepts, which you then use over and over again throughout. And in the process, you reinforce them. So you don't say you have to go back to chapter 7 to figure out how to do this in corporate finance in 14, because it's been used all along. So it's the uses of it. I think that the book is more sophisticated. This book is more sophisticated, has more content, and has more, we've learned something in the, what is it now, almost 30 years or 25 years since we did our last principles type book. The concepts are the same, but we have much more technology, and we really learned and organized it, I think, in a more compact in one way, and also richer in another way. And we have a lot more we can use. So it is a different book, but the basic foundations, sort of self-exemplifying, I think, is that we're doing it along the same way. That you should look at this. Is the first thing you learn when you start a new big subject is you learn the foundations and the principles, because they will be they're the bulwark for you to be able to understand not only what is going on now, but what's going on in the future.
Right, and they're the 10 principles are new to this book, and they are fundamental.
Thank you, Bob and Zvi. We have another question. The textbook has quite a lot of chapters. While all the material is very interesting and important for understanding, I doubt the material can be covered in 15 weeks of the typical semester. Do you suggest using the textbook for 2 courses, the introductory and the next level? If so, which chapters do you find the most important for the introductory level course?
I can go ahead and answer this. So first of all, I would agree that I think that it would be difficult for a single semester course to cover the entirety of the book. I think depending on how fast you go, it's possible, but it might be a stretch, I think, for most courses. For a typical semester for an introductory course, I think the most natural structure in our book is to use part 1, the chapters in part 1, which are really meant to be the core principles and introductory chapters to introduce a student who hasn't seen finance at all to some of the content. And then depending on the instructor's preference and also the level of depth that the instructor wants, then choose chapters from either part 2 or part 3. So one thing that I had mentioned is that some instructors like more of a corporate finance focus in their introductory course. And so assigning a couple of the chapters in part 2, such as valuation of companies or capital budgeting, might be appropriate. Some instructors like to focus more on capital markets, such as portfolio selection, and assigning those chapters for an introductory course might be more suitable for other instructors.
Yeah, and I would just add to that in those schools where they have a 2-semester sequence introduction to finance, that you could cover, the whole book in 2 semesters, and there's plenty of material. You flesh it out with cases and other projects, and I think it would be very suitable for a 2-semester sequence.
Thank you. We have another question. Do you have any suggestions of including specific chapters for the course taught at the introductory level for finance major students versus other business majors?
Yeah, and that's a good question. And I think that the modular structure of our book, I think, is really well suited for that type of differentiation if an instructor wants to do it. I think typically from what I've seen, the business major students are less interested in some of the more heavier math, so to speak. So I think that if I were to construct a course like that using our book, I would focus more for the other business major students, more on the part 1 chapters. And for the finance major students, if it's a separate course, I would probably include the part 1 chapters, and then also just add some of the more calculation heavy chapters from either part 2 or part 3, depending on the preference of the instructor. So I think that a general introductory course, in other words, part 1, is very well suited for that. But to kind of tailor it perhaps to more advanced students like finance major students or honors students, I think additional content can be selected from the other parts of the book.
What skills do you see as a prerequisite for the level of this text?
Well, Richard, you're teaching, you're doing it now, so you have the the firsthand field experience. So perhaps you could continue to elaborate.
Yeah, absolutely. The book is written with no assumed knowledge of previous finance. So we're assuming that someone going into the book is learning finance for the very first time and has not had a previous finance class. Beyond that, I think the basic prerequisites would be the basic prerequisites that we have for our introductory finance class, and I think many universities have, which are generally some basic knowledge of statistics and some basic knowledge of algebra. So I think many of the students that come in as business major students in the universities will have that prerequisite. Beyond that, we don't assume any further knowledge or advanced knowledge of math or finance.
No, but I would add that it'd be very helpful to have a course in economics, some training in economics, because finance is basically a branch of economics.
Another question, Richard, would you mind speaking a little bit more about how you're going to be using the text in your different classes, or how you already have done that?
Yes, absolutely. So I'm teaching an online MBA class right now, where I'm using the textbook, and then starting in March, I'll be teaching a couple of half semester classes, one at the undergraduate level and then one at the master's in finance level. Both of those corporate finance classes. To give a sense of kind of where the course is and the structure of courses, these courses basically take place right after the students have had one semester of introductory finance. So what I do for my courses is essentially I will assign basically one or two chapters as review at the very beginning to give them a refresher of what they've learned, or perhaps a few new things from the introductory finance class. And then my focus is on the part 2 chapters of the book. And really the courses that I teach mirror what we have in our chapters very, very closely. And in my experience, it's been quite successful in terms of students understanding the material. Beyond that, I'll use some of the other features of the book beyond the content to kind of help students understand the material a little bit better. As I mentioned, we have an online test bank that comes with the book, so I'll be assigning some of those questions as extra practice questions for the students so that they can prepare for the exams. And the homeworks that I use as well are very similar or identical to the end of chapter questions that we have in the book.
Thank you. Okay, are there any further questions? Just give everybody another second or two to think. Again, if you think of a question following the webinar, please feel free to email me and I can reach out to the authors and get that information for you. Just had another question too. So many beginning finance textbooks focus on the CAPM and may or may mention the existence of multi-factor models. How do you deal with this issue? Who wants to take that one?
I'm sorry, I didn't hear you. I apologize.
Yeah, it was actually the same with me. But
No worries. It says so many beginning finance textbooks focus on the CAPM and may or may mention the existence of multi-factor models. How do you deal with this issue?
I'm not quite sure. Did you say you say a PhD?
CAPM. I'm not sure what that stands for.
Oh, I see. Okay.
Capital asset pricing model.
Thanks, Steve.
Oh, yeah, well, the CAPM, yeah, I'm sorry. Forgive me, everyone. I'm not hearing as well as I should be or whatever, but look, of course, we take the CAPM. We all know that the CAPM in terms of practice, on the one hand, is not a wrong model, but it's not deep enough. It's not able to capture the data and explain what's going on well enough to be used on its own. But the concept of the CAPM, why securities have different expected returns and so forth, is not wrong. It's correct. So if you go to a multi-factor model, which you can, we don't have that, we allude to it. I mean, that's something I had a little bit to do with, but the core idea is to begin with, they get these principles and the CAPM teaches it well, but it isn't the end. And then if they really understand the CAPM, if they go to a next level where they are learning about multi-factor models or any number of different other models are used for capital asset pricing, the concept doesn't change. It just generalizes. Instead of one factor, the market, you now have N factors or 2 factors or 4 factors or whatever. And what do you associate them with? They are all non-diversifiable systematic risks, just like the market. So the point being, get the concept of a core of what's important about the CAPM. And then if you move on to more advanced levels in that direction, it's much easier to do it because you're not looking at it as, oh, everything you learned in your first course, forget it. Now we're going to teach you the real stuff. It's a natural way to teach. At least that's what I found from teaching it for a long, long time.
Thank you, Bob. Another question is, how does fintech influence finance teaching in the future?
Okay, well, I'll answer my view on that. Fintech is, it depends. Look, let's just look at what's going on in fintech. Everything that's being done, or the big stuff that's being done right now, there's a lot going on. Look, technology has always been a part of finance. That's nothing new. And finance science has always been a part of it. But fintech is doing what? It's using technology to deliver in a different fashion the same uses or functions, whether it's banking, currencies, whatever. You're not inventing a new financial thing. You're inventing a better way, you hope, of being able to deliver the same services, the same needs that people have more efficiently, more effectively, getting it to people who can't get it before, leveraging technology. So a lot of fintech is associated with the technology, and that's important. But that's why I think our book is set up in the right way, because if you look at history, or certainly in the last 50 years anyway, the amount of change on how we do things in finance, not what we do, we're doing the same kinds of things, but how we do it changes radically. So if you teach people according to the institution, you teach them that a bank does this, an insurance company does that, you put yourself in a very bad position with things like fintech, because fintech is trying to do it in a different way. But if you understand the core concept of what's trying to be done, that's the same. And that puts you in a position to answer questions like, does this fintech really solution, how much value does it really add? What are aspects of that while they're good aspects in one way, what problems are raised with that? Because the way it's delivered, raises questions, whether it's regulation, whether it's security, whether it's any number of things. You have a way of always teaching the same thing. You don't have to keep changing it every time there's a wrinkle or even a big change in the technology. So that question in my mind is really one of, that's why you want to teach people in a core course in a fashion that they are, instead of being afraid of change and changing how things are done and say, oh my God, I don't know how to do that, that you've taught them in a way that they're going to say, someone can deliver to them the notion that, look, this is the same as what you've been doing, but here's how we're going to do it now and why. And I think that's, from a way of teaching students for the long run, as well as their job next year, I think that's the way we do it that way. So I feel very comfortable with fintech. We're not going to spend a lot of time on, there's more stuff on machine learning and everything else. We can't put that into it in a meaningful way into a beginning text. You're already seeing that when we've tried to pare it down to the concepts and so forth, that could fill a course. So all those things, and it's not that they're not interesting, there's just no space for it. You could have to have specialized courses for people who are interested. And the other part is that you don't have to be a technologist to be good in finance. Okay? And so, anyway, I've said enough. I'm running out of time. Let's get some more questions, if you can.
Yeah,
Yeah, I would just add,
I'm sorry, Zvi, we are over time. If people want to stay, we do have a couple more questions that we can quickly answer, but if you have to go, then I can get these extra questions answered for you and send them back. But are you able to stay a little bit longer, Zvi, Bob, Richard?
yeah, I can stay a little longer.
Well, sure, certainly.
So the next question was, do you use this text for a wholly online course? I think that would be a question for Richard.
Yes, so I actually am teaching right now a fully online MBA course using the book. So it certainly can be used for a fully online course. It's halfway through the course, but so far so good, I think, with it. Now, as I mentioned, we have an online suite of videos. Now, to be upfront, it's not to the point that you can just use the videos for the online course. We probably will aim to get to that point as we expand kind of the suite of those videos. But the idea is that this online supplement can be used to go alongside with the online content delivered with the course. But in short, it is the book can definitely be used for a fully online course.
So the other question is more for the publishing house. Will this textbook be participating in discounted programs for the students, such as Follett, if adopted for the course? I can say that yes, from my knowledge, yes, it is, but you can get a verified answer for you, a confirmation on that, and then I can let you know. And then the last question that we have for today is, can you show any examples of questions from core section 1 testing?
That might be something because I don't have it open and I would have to log into it that we might just want to follow up on in an email afterwards. But yeah, we're happy to provide examples.
And one last question, does pricing include a print copy or online text only or both? The pricing includes just the print copy or the online text only, so it's one or the other. Okay, and with that, we are over, so I'm going to call it now. But I thank everybody for joining us today. Thank all the authors for being with us here today to talk about their new textbook. You will receive an email following this webinar about how you can get an examination copy of the textbook if that is something that you want. And then you can also email me. Again, I put my email in the chat earlier on, so if you had a chance to copy that, just in case you have any questions following the webinar today, that you can reach out to me to ask that. But if not, I thank you all again, and I hope you have a wonderful rest of your day.
Okay. Thank you all for coming, and
Thank you.
you found it of interest and you'll explore more.
Thank you.